far as the S&P goes, we got a little bit of a green open. And now if you're a perma bull, you're going to call that a higher low, and you're going to say we're good. Unfortunately, I think this was our last low. So putting in a higher low, that would have been right there. I think if we didn't have that, we could have called that the higher low. We melted down. We gapped down. We sold off. We talked about this all last week. I honestly think we're gearing up more for like a channel down. I think this is just going to end up being a short entry. And again, I really don't care what your confidence is in me. I just want to caution everybody. A lot of people will take trades, and their confidence is more in the guru or the person they're watching on YouTube or TikTok more than it is themselves. And the dangerous part about that is they don't understand the trade. Now, you might just say, like, I understand the trade, I understand all the risks, I like what Don's saying, I'm going to follow it. And at least as long as you understand it, then you know, like, the volatility here is probably going to make a lot of people look like fools more than anything. Because right now, tomorrow could just be the absolute greenest day. Or we might just, I don't know if I'd even call it a shock to see another red day like this. So I have the short position in SQQQ for that, and I will add on. Now, I know that's tech. We'll get to that here in a second. But just that being said, I wanted to I would be more surprised to see it just screaming up green than I would be red. You said something was strange on the gap to the downside, and you were spot on. Do you see something on this open gap on the Qs? Is it too early? Yeah, a little too early. So right now, a little bit of a gap up. We were talking about this gap right here. Now, what's interesting about this gap is you have to take it all in. So everyone tells you it's always the whole story, right? So remember, we got small candles, medium candles, big candles. Those are your three sizes. And we're cruising up, just cruising up, small, medium, medium. And then we just break out into the largest. We just went for the calories. Large, just full sending it. So we already sold off a bunch. And then after that, gap down even more. There was 0 people buying the dip. That told me, that's what I wish I would have just went to more that night on YouTube was everyone's confidence gone. So did we just get it all back on one green candle? No, probably not. And on Sunday, this was not on Sunday, was it not? Yeah, this is Tuesday to Wednesday. That's what's weird. On a Sunday open, there's probably 4 people trading. If I told everybody right now to buy an ES call contract, we'd probably move it. And before anyone jumps in the comments, stop. Like there's just 4 or 5 people trading it right now. So a gap like this, not too terribly worried. I honestly, if anything, I bet we're going to end up Monday kind of like this candle right here. Not to say it's going to gap down right after that, but I bet we get some chop. Maybe we end this thing red. If we do jump up into this yellow zone right here, I will add on. So I'm short the NASDAQ right now, SQQQ. If it jumps up into this zone on the ES, then I will go short. Probably an actual ES contract or maybe some SPY puts for Friday. The expected move let's just go over the expected moves right now. All right, let's break that off a little bit. Oh, man. Drives me nuts when they just start putting on screens, putting the windows where they think you want it. Don't. Trying to get it all in there. All right, so these are the updated weekly expected moves. So IWM 702, QQQ 1350, SPY 1056, Tesla 1260, Meta, which is normally a $20 move, 44.48. That has earnings. Microsoft 22.29, Nvidia 765. So we're not expecting chips to really do much at all this week. Amazon 14.17. Let's see, Apple 10.13, Google 5.99, Ford 50 cents. Palantir, $1.56, which is a little bit up from its normal dollar move. Intel, $2.71, AMD, $12.99. If you guys have my charts, I will update those lines right here. So after this stream, they should be accurate. Right now, this is last week's expected move. We got outside, reined it right back in. What level do the bulls need to be above to change your mind on the sell-off? It's a very good question. Should have covered that. Honestly, probably this is what's going to – people are going to talk about a gap fill and then a rejection. It's very rare you talk about that in the futures realm. But if we don't even get above Wednesday's high everything about that could just be a lower high. So we could even just come right up to it, tag it, come back down. All that is horizontal. We're still not even bullish. And that's a lot of ground to cover. Can you imagine trading an ES contract from here to here? Or missing out on the fact that it could do that and you still be, or if you were short the whole way, you go longer here. That's a lot of money in just even a single contract. Some people might suggest that it needs to get above this gap right here. Now, once we get above that, I think, yeah, we're probably chopping our way back up, probably to all-time highs. But if for me, it's going to have to jump up, at least hit this blue zone, pull back, maybe bounce off this yellow zone, put in a higher low, and then come. But right now, we haven't even done that. All we've done is a dead cat bounce. So I think it's more of a price action right now than it is a level thing. Because if we hold this here for the next week or two, oh yeah, I would start buying the dip on that. We base this thing out. Right now, sellers are in control. Sellers are taking this thing south. There's no buyers. There's no confidence. We hold this thing sideways. Sellers are getting tired. They're giving up. Or the buyers are saying, that's cool, but I'll take every share you got right here. Every futures contract, every share, everything. At that point, I know I'm not the only buyer, and I'd feel a lot better. Not to mention, it would throw off any wicks and candles. I'd know exactly where to put my stop. I wouldn't be surprised to see us just dance around inside this range like we did a while back. All right, as far as the NASDAQ goes, that's a bear flag reversal similar to this last one right here. And I say bear flag or reversal because they look the same, right? Just depends on what echo chamber you're sitting on. There's always a heads and tails. If you're bearish, you're going to call that a bear flag. If you're bullish, you're going to call it a reversal. And that's it. And so far, this gap and go that we have right now on futures doesn't even cover Thursday's candle. So we can just talk about the NASDAQ and how we've just been inside. Inside, let's make that red. You guys know what the red lines mean? It just means inside candles right here. It means we haven't done anything. So let's baby steps, right? Let's get above that first. Okay, so now we've talked about, let's talk about the S&P one more time real quick. Let's see where we're at. Because we know the NASDAQ actually corrected. Let's go from the absolute peak to the bottom. All right, so the S&P is down 5%. We're halfway to a correction, while the NASDAQ actually hit the correction. And that's about right. Not that you get a 2-to-1 move all the time, so we're just shy of 10%. We're at 9.8. Now, the NASDAQ doesn't always just move double, but it's from my experience, I would put money on, now I haven't backtested this, but if I were to go back in the charts, I would put money on the fact that when the S&P's down 9%, the NASDAQ's down 18, right? With the three we break down, right, the Russell, the NASDAQ, the S&P. The NASDAQ is the runner, right? The S&P is the jogger, and IWM is a walker. Like, if you want to go in turtle mode and make easy decisions, it's IWM. If you want to have your emotions tested, it is tech. So if the S&P is going to go to an actual correction right now, some say we are, and I'm not out of that boat. We've had a solid leg down, and this could be a very decent dip buy. But if the S&P is going to go to a full-blown correction, then the NASDAQ's also about halfway there, which is why I went SQQQ and not anything else. I didn't want to go SQQQ options because I know how to make money. Just kidding. But I didn't want to give myself an expiration date. All right, I want to give it some wiggle room, just see how things are, and just basically my SQQQ position is the poncho. I'm in the splash zone, but I'm wearing the appropriate gear. If it sends down, cool. If it starts to push up, everything else we have is going to cover the SQQQ position more than enough. So just kind of preparing for that. So if this bases out and hangs out, basing out right now in the beginning, that's still bearish. Basing out for a week or two, that's going to start to be bullish. So right now it's in the bulls. The ball is in the bulls' court. They need to do something with this. Because if we don't get out anything else, then it is going to head down. We have zero confidence in the market at all. So bring the dump on. We make the – hang on. I hate that YouTube. YouTube has a heart in the chat and you can't see crap. It says we make the same short as long. Yeah, if not even more. Just because to the short side it's so much faster. You can lock it in so much quicker. And buy that dip and just let it go. I don't do as well short as long. The short side is the emotional side. That's the panic. That's everybody losing their mind, making emotional decisions. If you want to do well, it's not making those emotional decisions. Doesn't mean you're great at shorting the stock. It just, so what lawyers say is it means nothing. But emotional people are they're throwing up, they're throwing their shares out probably at some of the worst times. So to do well in the market overall and to just call this your career, you want to learn how to manage these times. Because to tell someone you're an awesome trader and all the market's done has gone up, oh, good job. Good job. Did you quit everything you did? The people in 2021 that really thought they were gurus, I'm not calling them scams. They really thought they knew what they were doing because all you had to do was show up. Anyone could have showed up and just made money in 2021. I left money on the table because I did things like risk management, those silly things. But it's cool to pay attention on these downtimes, whether you're short or not. Whether you want to not excel, but take advantage of the short moves or just wait for the dip buys, recognizing this, like we talked about last week, on how characteristically things have changed and people got emotional. Let that thing down. Let the emotional people just be emotional, right? Just let them scream and punch holes in the sheetrock. Just not at your house, right? Not with your account, somewhere else. But for now, let's see if they calm down. If the bulls don't really show up, today's move is nothing. It's cool that it's not an absolute meltdown, but that's not enough for me to say let's just get this thing going to all-time highs. As far as the Qs, so yeah, even last week we went for it, and like we talked about, so this is 1 standard deviation, this is 2 standard deviations. 80% chance we rein that thing back in. 20% chance we full send this thing south. And that's again, playing the game of numbers. Most of the time we rein it back in. That small chance, though, that 20% that we send it, things get nuts. And that's how things can get crazy, is volatility. Because right now, guys, remember, it's you and institutions inside here. Once we get into this realm, it's you, the institutions, and the market makers all moving things around. So you just jumped in the middle of a stampede. Good luck. And some people love it. Some people don't care for it. Some people hate it. Doesn't really matter. You just need to know that's the game board you're playing. It's like jumping in the stock market and calling it rigged. Like, it's not rigged. You have the same rules as everyone else. They have more money. They can do more things than you. And if you had as much money as they have, you could do the same things. It's not rigged. You just believed it was something different. You went into Monopoly believing it was chess rules, and you're calling it rigged because somebody rolled the dice and moved it. It just doesn't make any sense. But when you understand the rules, just play the stupid game. And just know that maybe the big players just jumped out on the court, and you're going to sit this one out. Then sell puts. It's a great time to, let's jump back to the NASDAQ. Now, if you don't mind owning shares of your favorite company, and it's in tech, Tesla, NVIDIA, Palantir, Meta, Microsoft, all the big tech names, you see tech melting down like this, you know what's really up? Puts. You know what's really expensive to buy? Puts. Gamblers are buying those. Emotional people buying them at the bottom. You know what's really awesome to sell? Puts, because the gamblers. This market caters to gamblers. Caters to gamblers and people that don't know anything. Because that's where everyone gets their money. My account is literally full of everybody that doesn't know what they're doing. Or maybe they just made the wrong trade. There's a loser in every trade. But so be it. Just because you sell puts doesn't mean that thing's all over. It means you collected some money to buy your favorite shares or buy your favorite company. Just make sure you're prepared to own it. 'Cause you might sell puts right here thinking here comes the bounce, and then you own it. So be it. If it's your company you want to own for a while anyway, well, call that free internet money. Trending is all that matters, not direction. We could probably break that down a little more. You think earnings will have any effect? The part that sucks about earnings during times like this is there's actually a statistic. I think it's like 86%. It's closer to 90% of the time the earnings reaction is just what the market was doing. So if we're in a bearish market, the earnings reaction, red. If we're in a bullish market, it's more than likely the earnings reaction is green. But that's what sucks. It gets choppy. We're in an environment where things just aren't looking too hot. Things are about to break. I think that's what's going to cause the rate cut. We need something to break. So everything's melting down. Tech's in an absolute free fall. Your hair's on fire. Run around like a chicken with your head cut off. And then Meta says, hey, we made a couple bucks. No one's going to care. It gets overshadowed by other stuff. And then that really hinders the earnings reaction. So that's what makes it very weird talking about earnings. So if anything, I would say it's probably more going to be like the market sends it south, earnings pushes it right back up. Cool. Market sends it right back south, equaling a whole lot of chop. Day traders make a whole bunch of money if their execution's on point. But the holders are going to see a lot of up, a lot of down, and then at the end of the week say that was nuts. It did nothing. As far as the Russell goes, let's actually fill these in so it's a little bit easier to see. These are little speed bump zones, but they're earning their stripes. As we drew these zones out a while back, not just now, and we can pull that up actually where we got them from. So right back here. Now characteristically, the Russell does this a lot. Here's your major zones, and then here's the inside where we play the back and forth game. So if we break this horizontal pattern, yeah, we might just run right up and tag that zone. So don't get too carried away if you're trading the Russell and it breaks this zone, because you're literally going to break that zone and the market's going to play whack-a-mole. You're just going to pop up and get hammered right back down. Maybe not necessarily, but kind of both ways. If it breaks down, you're still looking for a buy right here. If it pushes up, you're still looking for a sell right here. But I'd say the NASDAQ's holding up pretty well. Now I don't want to get started. Last time we talked about a rotation and how it's probably not a rotation, and some people got their feelers touched. And I really wanted to bring a teddy bear so they could show me where my words hurt them and touched them. But for now, the reason why I would be leery of this, everyone's talking about a rotation into the Russell, and it's just not mathing right. Okay, so not that it's got to be a dollar for dollar, but the NASDAQ absolutely melting down while the Russell holding sideways. Maybe half of them are rotating into this. The other half might be rotating into cash. So I wouldn't just go, because some people are really gung-ho about the Russell right now. And it looks good, and they're probably really gung-ho because their other tech positions are down. This is the only thing that looks green in their account. So easy on, my opinion, easy on that one. I think if there is a rotation, it probably is into cash or bonds or something a little bit safer to ride out the storm. And the thing about that is when the cash gets deployed, like people are saying, it's obviously the next step is what are they going to buy when it does that? So when they do deploy that cash, is the storm over with? And why are they rushing to small cap? Why are they not rushing right back into their favorites like Meta, Nvidia, Microsoft, all the big tech names that run the market anyway? Which is why I trading the Russell, it has its time. It has its time to shine. And I do trade it here and there. But tech, it does run the whole. It just runs the markets. The market, 50% of the market is responsible from like a few names in tech. So when they're down, the whole market's down. But when the money comes back in, they're buying those right back up. Everyone else is just allowed to follow in their footsteps, or live in their shadow. The dilution into cash and crypto and a little into gold, and the Russell, I guess. Yeah. We're already turning red. Are all of them? Just the Russell. Oh, just kidding, little Russ. You're doing good. Don't be sad. Turn green. Everyone's rotating into you. No, go. I'm sorry. We hurt Russell's feelings. That's completely my bad. Do AI stocks look green this week? What are some good AI tickers?